Okay, so first of all, I'm going to talk about euro dollar. Okay, so how many of you remember in our last webinar? I mean last week, right? When we talk about euro dollar and we found that the euro actually shoot up to 1.26, right? 1.2060. Do you still remember this big candle? Yeah. And what do I say? What did I say? And I say the euro is very, at a very extremely high place. So we are going to use this Fibonacci extension tool. Okay, this actually is a reverse extension because by right the extension should be, we pick from the swing high to swing low, and you're looking for extension to, downward. Okay, facing down. You follow the trend. This is a downtrend, right? This is a swing from high to low. However, if the price didn't break new low and price goes, in the opposite direction, and typically it will actually goes into the 1.61 extension move, okay, for the reverse 618. Okay, so that is also very, very strong. It's actually a very good trade, right? So we short from 1.2060 when the candle actually touched this line, okay, and into the 1 hour chart we find the price action, right? What do we see? We see actually this candle, okay. So this is a very, very good example of showing that wait for the price action to be confirmed before you take a trade. Okay, we know that 1.2063 is going to likely to be a turning point. However, when the price, when the price first come to here, what do you know? What do you think, guys? Do you think this is any bearish signal comes to here already? Do you see the candle? We only see it cannot close above it, but is there any bearish sign yet? No, right? So you have to wait, right? Only this candle, yeah, correct, David, you're right. So we see a candle, okay, test this price, okay, but this candle is still a bullish candle, and the pain is not enough, long enough, okay. So this is not a bearish price action. So we have to wait for one more candle. Okay, how about this one? How about this one? Can you see that? Yes, the next candle, that is good, right? Yes, this is kind of confirmation because the sellers is actually overtake, the buyer's starting point of this opening price of this candle. So this is actually a price confirmation. And once you see this, okay, we are actually quite sure that 1.2060 may become a very strong, rejection level, and therefore you can consider short, right? How you take in the short? First, you can actually goes into the next candle, okay? So the next move, let me just highlight to you. You can open your trade at the next candle's opening price, because this is a 1 hour chart, right? So just wait for this 1 hour to close below this low from this previous candle, and the next candle you can actually start to short immediately at the opening price. That is how you trade this bearish engulfing candle, okay? So you short from 1.2040, okay? You short from here, and where's your stop loss? Tell me, where is your stop loss? Correct stop loss. If you want to trade this short, right? Say for example, we short from here, 1.2040, 39, okay? Yes, you're right. Your stop loss should be put right above the previous candle's high. So let's just measure, okay, it's about 1.2070, right? And typically for a 1 hour chart, I like to, add another 10 pips, okay? So add another 10 pips move, okay? For a buffer, okay, okay, or we call breathing wiggle room, okay, breathing room, so that to prevent the price, shoot a spike and take our stop loss, okay, and went back. So, and this, how many pips we are risking? from 2040 to 80, we are risking 40 pips, right? Yes, we are risking 40 pips. Okay, our risk level. Risk is 1.2080 minus 1.2040. That is 40 pips. Okay, if you trade one standard lot, okay, which is USD 400 risk, and then you have to ask your question, okay, are you willing to pay this, or are you willing to risk this $400 for this trade? Okay, if you are not comfortable enough to take this $400, okay, you should reduce your position size, right? Say for example, if you only want to risk 200, okay, so if my trade risk is only 200, I can only sell how many lots? So it's 200 divided by 400, which is 0.5 lots, right? That is simple calculation, but it's very useful for you to calculate your risk before you enter the trade. Okay, it's very important because we are talking about risk management all the times. Trading is never about gambling, right? Trading is about how you want to invest your money, okay, to take a little bit of risk, but to earn 2 or 3 times of the reward. Okay, I hope you can understand this logic. Okay, so let's say we enter 0.5 lots. Okay, yes, correct, David. So where is our profit taking point? All right, so from this chart, okay, thinks the euro goes up so high and breaks this point. Okay, by looking left, okay, we are looking for some kind of an important support structure for to take profit. Okay, so here your initial taking profit, the TP1 should be about 1.1910, which is exactly the previous high. Okay, because it is very likely for the price to pull back to the same area of the breaking point, okay, which is here. Okay, so this is your first target, and your second target will be about the beginning of the move. Here will be this part, because it's after this bullish candle and the euro starts a bullish trend. So we have another important structure here, right, about 1.1828. Okay, this is 2 levels for you to take profit. Okay, and let's measure if the price fall from 2040 to 19110. Okay, that is how many pips? That is 130 pips, right? So we are risking 40 pips to in a reward for the 140 pips. That is about 3 times risk reward ratio. If this goes even lower to 1.1828, okay, congratulations, you earn 200 pips. So 40 to 200, that is 1 to 5. Okay, so this is how we want to trade. Okay, we want to risk a little bit more, a little bit of money. Okay, risk this much, but we want to earn this much. Okay, so that's the logic. Okay, so then the price you see here. Okay, first target hit here. This is our first target hit. Okay. And then the euro just keep falling, right? And it hit to 1.1828. Okay, so we have we caught a very nice trade for the euro short. Okay, 2040 to 1828. Okay, that is about 200 pips. Okay, anyone take this trade? Please tell me. Give me some feedbacks, right? You short? Okay, good, David. Right, so this 0.5 lots, how much you win? You trade 0.5 lots and you earn to 1.2. Okay, 200 pips for 0.5 lots. Congratulations, you win $1,000, right? Right, because one lot, one pip is $10. Okay, you trade 0.5, so one pip is $5. $5 times 200 pips, which is 1,000 USD, and your risk is only $200. Okay, 1 to 5. All right, and then what you can do. And in my in my Chinese students group, okay, here, I say we can start to buy euro at 1.1828. Why? Why we want to start buy from here? Because that is the origin of this bullish move, right? So we can consider the whole downtrend move is a correction move of this previous bullish trend. So if we want to buy from 1.1828, where is your stop loss, guys? Your stop loss should be put below the starting of this bullish candle, right? Which is 1.1792. Again, you add another 10 pips, right? So you put 1.1780, okay? So this will be your stop loss. And you buy from 1.1828, that is 30 to 80, that is 50 pips, 50 pips risk, okay? And tell me, do we have a good price action at the time when the euro touched this structure, touched this very important support structure? By looking at this candle, actually we have some kind of a good pink bar here, right? It's actually testing, but you know it's actually closed above this line, and most importantly, it closed inside the previous candle. So this one you can consider as a fake or false breakout of the bearish move. Okay, it's essentially a bearish trap. Okay, and you start to buy, and we can apply our Fibonacci level to here to determine where is our long target. Long target should be at first target is 0.382, second target will be 0.76618. So I can know the price before it really touched that, but I already set my profit taking point, right? So again, this move earned another, you know, kind of here. So from 1.1828 to 1.1975, right? That is another 140 pips, correct? And then, right, things that is beautiful of how you apply the Fibonacci or how you apply our trading strategy, okay, to find your ways to trade, okay. So we see the euro drop from here to here, and the price pull back to 0.618. Do you want to short it again? Can we short it again? Because we know that the whole bullish move to 1.1975 may become only the correction move of the previous bearish swing, right? Yes, and we can short. Stop loss should be below the bullish bar's origin move, so it's 1.1779. Yeah, so it didn't touch and it goes to perfect, right? We catch another buying trade here, and it really actually hit the stop loss at the non-farm payroll, hit the top profit taking point at the non-farm payroll day. So you can take profit at 1.1975, okay, and then you can short. Why? Because this is 618 pullback, and if you short, right, you win another. The short is doing good, right? On the day itself, it went back to almost 80 pips, right? Sorry, 120 pips, 1.1975 to 1.1855. So let's calculate how many pips we made, right? So the first move, we made about 200 pips, right? More than that. Second wave, another 140 pips. So that would be 340 already. So 340 pips, you add another 120 pips. That is 460 move. So only by the euro trade, we take 3 string. Okay, we short it from the high to the low, and we buy from the low to the high to the 618 level. And at the non-farm payroll day, if you join my live webinar host on the last Friday, okay, because last Friday I also, you know, send a link, right? Ask you guys to join my live webinar, okay, especially my students group. Actually, you are attend, right? So when the non-farm payroll, the NFP, the data released, okay, the euro shoots up, okay, and I say you can short, right? So only by the euro we made a 460 pips move, right? That is very nice. Okay, so this is how we analyze the chart, how we want to, you know, to buy low and sell high. Okay, so what about now? Because today is Tuesday, right? Today is Tuesday, and now let's look at, okay, did the euro break the range of the non-farm payroll day itself? No, right? It didn't break up to the high. It didn't break the low, okay? But what we can feel that the buyers is actually losing power. Okay, the buyer is losing power because it's trying to push the price too high, but it cannot go above the 1.1975. And then, okay, in the last 1 hour, the euro actually fall down quickly and break important support, right? So what you can do is you wait for the price to pull back to the area, right? If you didn't have your short, you can consider to pull back and short, right? Do you agree? You short from here and see whether the euro can fall down another wave. Okay, why? Because this is a very good structural breakout. Okay, we have a support from 1.1897, which is 1.19 level, the wrong level. Okay, but it actually, very big setting force. So if the price ever can pull back to the area about 1.1890 to 1.1900, okay, let's put a range a little bit further, which we here, okay, this week, okay. So if the price pulls back to here, you can consider to short, right? And if you want to short, your stop loss should be very close to 1.1920, okay, about here. So you risk, this is your risk. Okay, you're risking this only about 30 pips, right? And you are in exchange of about 2 times of risk reward or more than that. Okay, so I think another time the euro may fall down, it may goes back all the way to 1.18. This level, this will be an important support for the euro. Okay, so I mean, if the euro really goes there, your shorting should be works very well. Okay, so this is my view for the euro. Okay, and for today, for Tuesday, and since the breaking out candle happens and we want to short the pullback. Okay, understand? Do you understand? We are shorting the pullback, shorting the neckline. Okay, stop above 1.1920 and aim for 1.18. So now it's 1.1880. Okay, so another 80 pips downside room if you want. Okay, any questions? If you fully understand, please reply me by 1. We just type 1 here. Okay, let me just check how many of you understand my logic. Okay, I want to see you guys to participate in the discussion. Okay, yeah, I don't want to just telling you, okay, where to short, where to buy, but importantly, you need to understand what is the logic. Okay, and I have explained very clear. Okay, all right, so okay, that's all for the euro. And in daily chart, let's look at the big view. Okay, daily chart, the euro is kind of making a reversal, but not yet confirmed bearish trend because it didn't break here. Guys, you need to be very clear that only when the euro breaks 1.1675, okay, then you can say that, okay, the uptrend is over, okay, and it makes a lower low in the daily chart, lower low, and then you want to short the pullback to enjoy a long-term bearish trend. Okay, but right now it didn't happen yet. So for all the people who are holding the short position, okay, do be prepared that at 1.18 level you need to take profit, right? Because this becomes a very important support structure. Okay, we need to see lower low and lower highs to confirm the bearish trend. All right, of course you can use the trend line to help you to have some kind of feeling that whether it is supported or it is broken. Okay, so I think we can take a 1 hour chart, which you can take a quick short, and but for the long term, you only short when the neckline was broken or when the important daily support structure was broken, which is here 1.1650. Okay, it may the euro may forms like this. Okay, it may becomes like this. Okay, I don't know, but only this 1.1650 level was broken, then you can say it's a top. Otherwise, it's still a correction move because overall the the euro dollar is still in above this supporting line. Okay, so don't think that your short is going to be a very long-term short. Okay, take some profits when it hits the support zone. Okay, and find the pullback to short it again. Okay, until it breaks the 1.1650. That is very important. Okay, that is how you know that. Okay, is you want to buy or you want to be a buyer or you want to be a seller. Do you use Ichimoku? If you have some time, can you show us how to use Ichimoku? Okay, Ichimoku I don't use it quite a lot of times, but it's actually all the indicators are the same because it is laggy. Okay, of course you can apply the Ichimoku. Okay, basically Ichimoku is the same thing about moving average, right? So it's just telling you that there are two lines. The blue line is the quick line. The red line is you know low a slower line. Okay, so if the price is above both of lines, is uptrend, right? And of course here, do you see the cloud? Right, this is cloud, right? This is the lines. Okay, you see the cloud, you mean that okay, the real support is about here, right? This is kind of like moving averages, right? It's just but this just telling you that sometimes when you see a big reversal, you want to see where do you want to find support. It's never because of the indicator works. Okay, the indicator didn't work. Indicator never works. Okay, it's the orders that works for you. Okay, say for example, okay, and we just now I mentioned 1.1650. This is a very important support. Look at the chart, right? Do you see this cloud sitting here? So the cloud telling you that, or if the price pulls back to here, you may find some support and you can consider to buy. Why? It is not because of the cloud is there and people want to buy, right? It is because the horizontal support, there are a lot of buying orders here. It's all the buying orders, unfilled orders are here. So when the price goes there, those people who didn't finish their job, those traders didn't finish their job to buy the euro at 1.1650, they were going to buy. So if there's buyer there, okay, the price will have some support. Okay, so I won't actually recommend to use Ichimoku or any indicators because they are lagging. Okay, you want to know that when it's going to break, right? Sometimes you say here, okay, looks like this chart, okay, oh, it is break the cloud and they have a bearish pin bar, and if you buy from this breaking out, you are losing a lot of money. Okay, right? And the indicator really actually mess up your chart. Looks so messy. Okay, so I will just use horizontal support or horizontal structure. Okay, that will be enough. Okay, indicator you can use as a supporting evidence. All right. So if you want to know that how to use indicator Ichimoku or RSI or the Bollinger Bands, right? It won't tell you where it's going to happen next, but it can tell you what's happening, already. So essentially, you are using the historical data to predict the future move. That is not correct, right? So that's my explanation for the Ichimoku. Okay, so I hope I have answered your questions. Okay. Basically, my view is if you can use Ichimoku or any indicator to catch a entry signal, I can tell you that by looking at the chart, looking at the price action, looking at the structure breakout, you definitely can find a better entry, right? So you don't need to rely on the indicators. Okay. All right, let's change for the gold. Let's go to the gold. Okay, the gold, we catch a very, very good trade in the last week, right? Where is our entry? And I mentioned that very clearly in my last webinar, right? If you go to my YouTube channel, you should have watched that, right? We know that okay, the gold breaks out too much and we want to pull back buy. This is a perfect pullback. Okay, perfect pullback. pullback buy. So buy from 1003, stop 1295, stop below the pin here, and look at the chart. You win, you know, that is almost 400 pips. Okay, 400 pips. And the gold gap up. Okay, it gaps up, right? And now still stay on top of the gap. Okay, so I feel that the gold may still rally. So just keep your long, right? Who bought gold last week? And in daily chart, my view for the gold is gold will remain bullish because it is a good breakout that crossed the 1,330, and it may goes to this level. So just pay attention to this level. Okay, pay attention to this extension move here, which is 11343. Okay, so guys, you need to know that how to use the correct measured tools for you guys to know that when the price or where will the price go to and where it's going to turn. So I won't short gold until it reached 1243, and even when it reached 1243, I need some more confirmation. I need to see some bearish setups. If there's no bearish setups, I won't short, right? But I will take some notice that when the gold reached 1343, okay, this 1.272 extension, okay, the buyers are likely to take profit. So if you have a long position, I'm going to take profit up here. I'm going to take some profit at 1343 and even for 1367. Okay, and you guys, you need to understand that there's a possibility for the gold to go a ABCD move, right? So the ABCD move is more higher, okay, which is about 1378. Okay, so this is telling you that, okay, be prepared that gold may go to all the way to 1378. Think about the upside room. It's still is bullish trend, right? And still have upside room. All the previous this resistance are not so good already because it is already, you know, tested many times. So I won't say the gold have too much resistance force above 1340 to 1380. The gold may all the way go to 1378. So you only have one view is when the gold pulls back, you want to buy and hold your long from 1,300. That it may gives you a very, very big winning trade. Okay, so this is for the gold. Okay, let's talk about the oil. Any questions? Yes, second edge 1,003. Yes. Okay, for the oil in the last week, I think Russell from my students group, he's from USA, and I'm telling I actually telling him that we can consider to buy the oil from 46.70. Okay, so this is a very good setup. Okay, because oil breaks out the downtrend wedge, it breaks out the wedge, and it makes a bullish move all the way to 47.42 and pulls back. Okay, so it pulls back to the same structure here. You see that? Push back to the so this will be a good example of the, you know, structural breakout trade. Okay, breakout pulls back to the same place, and you buy from 46.70. Stop loss below the breaking out candles low about 45.96. Okay, and now it is rallied so well. Okay, rallied so well, and I think the oil is going to hit 48.55. So it's going to go to the 618 level here. Okay, and you look at the bigger chart. What do you see, guys? We find a very nice, you know, bad pattern here. Okay, the pattern, right? We have X, A, okay, to B, and to C, and to D here, somewhere here, right? 88.6. Okay, so this is a bullish bad pattern, and it completes, right? And it works very well. Okay, and remember previously we have another short. We short oil from the C point. Why? Because we see another bearish harmonic patterns, right? We see a Garney patterns here. Okay, sorry. Let me just, I think I draw from the computer, is that better? Okay, we see a bearish Gartley pattern here from here. This is a bearish Gartley pattern, right? Okay, and we see another bullish bad pattern. Okay, and this is what we call the harmonic combination. Okay, so let me just highlight the color. Okay, so the yellow one is telling you that, okay, it's going to fall, right? It's likely to for the oil to fall, okay, from the C point. And where's your target? Your target should be exactly at the bullish balanced completing point, right? You take profit of your short and you buy at this level. If you didn't buy from the bearish trend, you can buy from the later on the structure pullback is here. Do you see the structure here? Okay. Why? Because we see a bullish breakout. Okay, the breakout, that is breakout, and it breakouts this rejection area, which is acting as a resistance, right? And then it pulls back, right? So here is your entry, and congratulations for Russell to have his oil, all right, oil long trade. That is very nice. So it works very well, okay. And the target for the bullish bad pattern, right, is actually the 618 level and 3382 level, okay. So be prepared to sell or to take profit of your buy, your long, okay, at 48.55. And when the price goes to 48.55, do you think it's actually quite a similar move of euro dollar, right? The euro is actually, okay, going down first and pulling back to 618. So we may expect the oil to have a strong rejection at this structure, right? Because look left, you see here, that is the turning point, right? Here is another turning point. And before that, that is also a very strong rejection force. So you can see a lot of the sellers actually starting the move from here. So when the price goes back to here, all right, you want to be a seller rather than the buyer. Don't chase price, okay? Don't chase. All right, so this is analyzed for the our view for the oil. Okay, just you want to take screenshot, go ahead. All right, you can take a screenshot. All right, and remember what Jack said. All right, so right now the oil is bullish, making a higher high. Okay, and we want to buy. We already bought from 46.70. That is already 100 pips. It's going to have another 80 pips move to the 48.55, and this will become the battle zone, right? The buyers and the sellers are going to fight at this level. So if the seller wins, right, we want to join the sell force, okay? Because long-term wise, the oil is at a high place, okay? So it may all the way have another swing to 44, all right? Okay, so that's for the oil. Let's talk about the sterling. Okay, yeah, David, yes, you're right. Okay, the GBP, okay, falls back and have a very, very important so-called this is a U-shaped bottom, right? And do you remember last time when I say if you want to short sterling, where is the best place? It's here, right? About 1.1960 is this level. Okay, look at this level. It works very well. So I think you should actually already short your GBP at about 1.1950. All right, if you short already, that is another already 100 pips move. Goes back another time, you can still to short. As long as the GBP didn't break 1.30, you are okay. Your stop loss should be about 1.30. Okay, so if the GBP cannot close higher than that, it will fall down. Okay, you're still going to fall to here or even lower. Right, so GBP want to short from 1.1960. Right, this is structure breakout, pulls back. Right, the buyers, okay, already makes off their move. Right, tried it 2 times, but it didn't, you know, breaks up. So want to sell. Okay. Okay, for the Aussie dollar, okay, as I said last week, okay, this is a long-term bearish channel in the 4-hour chart. So when this channel was broken out, okay, break up, right? We don't want to short it right now, okay? We want to short it at the 618 pullback. So you can see here, when you short from 0.7967, right, you can have some win, okay? You can have some profit. And right now it's still struggling at this time, at this level. So pay attention to this this zone, okay? So if the Aussie cannot go up higher than 0.7967, we can short, because the pulling this is a correction move already done the job. So the next move may become another wave of sell, and I think long term the Aussie may go back to 0.76, all right, to finish this move. Okay, so we may have potential Aussie, you know, bad pattern, right? So C to D, that is from 79.60 to 76. That is about a 300 pips move. That is a good trade. Okay, for the Kiwi dollar, Kiwi in the daily chart completing their head and shoulder. Okay, because this is a head and shoulder pattern telling you that, okay, the Kiwi is already finished other it's no longer bullish. It's no longer bullish. Okay. Okay, so this will be the head and shoulder pattern, right? So essentially right now is pulling back to neckline. So short the Kiwi about here. As long as the 0.72 is hold there, okay? It's actually a great place to short Kiwi the pullback and have another sell. Okay, so that is Kiwi. Okay, for the dollar CAD actually breaks. Looks like it breaks new low of 1.24. Right. So so there's I think we have a bullish. We have a buy plan last time here. Okay, it works a little bit. Okay, did work to here. So we have about from 1.2560 to 1.2650. We do win 100 pips, and if you don't take profit from the 618 level, you see here, where does the price pulls back to? Is pulls back to the 618 here. So 1.2650, you should actually take profit of your buy and make the rest position to become break even. Otherwise, you will be stop out. Okay, so right now it already break new low, but we don't want to short. We don't want to short right now because it's in an extremely low location. So be prepared that dollar CAD may have another move up, but right now things, the low is already made the new low, and there's no bullish setups first. We don't want to buy. Okay, we don't want to buy right now, but we want to prefer to waiting for some kind of information or some patterns to happen. Okay, or in 1 hour chart, let's see here. Okay, in 1 hour chart, what we can do is you need to measure this to 1.2427. Okay, this is a very important structure. Okay, if you see a bullish candle close above this and pulls back to here, you can consider to buy. Okay, only when this situation happens, you want to buy. Otherwise, don't buy, because still that is a very strong sell off. Okay, break 1.2427, pull back, buy, and your stop loss should be below this structure. Okay, and aim for reversal. Okay, so talk about the dollar yen. Okay, the dollar yen. We have last time, I think we have a buy set up, right, from 108.50. Okay, it actually goes up all the way to here, 110.67, and it's actually a good time to short the dollar yen based on this structure. Okay, based on this breaking out structure. Okay, so the dollar yen pulls back to here. If you take a short, right, that's perfect. That's perfect. Okay. Okay, but you can take some profit. Okay, because dollar yen right now is going to test the 618 level. Okay, the 618 will be about here. Okay, already I think seems already touched. Okay, so if 109.19 is hold, okay, this level you need to pay attention to. Okay, you may have a buying opportunity for dollar yen this week. Okay, that is possible. Okay, better for wait for the confirmation to for the dollar yen to break out this bearish channel first. Okay, break out channel and you want to pull back to buy. But this 109.19, that is a very important support level because it's 618 pullback, and look left, there's some structure here. Okay, it's actually a neckline here. So thinking of to buy the dollar yen at this place. Okay. All right. Lastly, let's move on to SPX 500. Okay. The S&P. Do you recommend any book to us? There's a lot of books. Yeah, you can consider to. There's one book you need to watch is John Murphy's Technical Analysis in Future Markets. Okay, John Murphy. So you can search for that book. Okay. Yeah, but I don't think reading books is going to help you a lot because you won't see the author. He won't answer your questions. Okay, so that's a problem of reading books because 100 people to read the book, you have 100 of own understanding, right? And they also won't answer your questions. Right? And a lot of books just telling you some basic rules. It won't telling you about how you apply the real trading. Okay, yeah, if you're going to take the real trading, right? When the books is written, it is about 10 years ago, 5 years ago, the market didn't work like this, right? So reading books give you kind of some knowledge, but don't expect that you can apply the knowledge from the book to the real trading world. I don't think that's going to work. Okay. So S&P, another very beautiful harmonic patterns, right? Is actually here. We have two. Okay. This is a bearish one, and we have a bullish one, right? So for people who bought from 2422, wow, that is a very big move. Okay, so 2422, if you understand how you trade the harmonic patterns, you should actually have a big winner from 2422 all the way to 2480. Okay, and right now the gap down, right? So S&P, very simple trade for today. Okay, look at the gap. Okay, look at the gap is here. So when the price pulls back to here, you can take a short, right, all the way to 2440, 2450, right? So the reason is the gap down, and there is a lot of people to selling to chase the price, but we don't want to chase. We want to wait for the price to pull back to the gap and short. Your stop loss will be somewhere above 2487, right? That would be good. Okay, and you have two targets or even lower. Okay, but very, very obviously 2430, that will be have a supporting here. The buyer is at 2430. So we have a downside room and we want to short the pullback. Okay, first level 2450, second level 2430. That is the view for the S&P. Okay, so Sterling Aussie. Okay, Sterling Aussie are looking for to have a long-term buying opportunities, XYAB patterns, right? So in the weekly chart, we have a good upside room, and in the daily chart, it is actually already pulled back to the neckline of the previous structure, 1.6170. So you can consider to buy Sterling Aussie because right now in 4-hour chart, there's I think it just formed the Gardy patterns, right? Yeah. So you can consider to buy the Sterling Aussie. Yeah, for a long time. As we said, the Aussie may fall down, right, for 300 pips. So Sterling Aussie, if the Aussie start to fall, the GBP AUD will go up. That's my view. But do take note. This is a weekly trade. So you need to watch my watch my trading plan. All right. I think your stop loss should be below 1.60. That would be better. All right. And don't trade too much lot size because this is a cross pair. Cross pair moves very quickly. 200 pips per week or 300 pips per week. That's very common. Okay, so I think your stop loss should be a little bit wider, right? And since your stop loss level is wider, you don't want to trade too heavy. Okay, so all right, that's all for today, and that's all for this week. I think we covered all the markets, and I think I'm still going to do this in the next week, all right, on a weekly basis. And don't forget that next week, next Thursday evening, 7 p.m. in Singapore, I have a live seminar, not webinar. Okay, it's a live seminar in Singapore next Thursday. So you can go to my Facebook to register for the events. Okay, you can look for me, right? And if you are interested by to take up my training course, right? So you can go to my website here. So I'm going to teach you about all the strategies that I have, okay? And I'm going to invite you to my students group, right? And to basically to solve your problems trading, right? How to find the correct setups, how to make your trading plan, how to set a stop loss, how to set the profit taking level, and how to identify those opportunities, the good quality trade. Okay, so you can consider to take my course and join my group, right? How to do now? Gold. I already tell you. Gold. I already said that is done. Okay, the gold generally we're still looking for buy, right? And just wait for pullback to buy the gold, right? And this gap is very useful. Okay, yeah, because if the price goes back to the gap, you should buy. And for those people who already bought from 1,300, right, take some profit and hold your long, right? Don't short gold right now until it goes to 1343. Okay. All right. So pay attention to the trading logic. Pay attention to the reasons why you want to short or why you want to buy. All right. Don't just look for buying or selling signals. Right. If you rely on too much of the signals, which is provided by some people else, right? One day you're going to have big trouble because it's either this person may be wrong, right, and you have lost, or maybe this person, right, didn't actively contribute his ideas or signals for a long time, and you don't have any trade, right? So the best way is to learn how to trade professionally, right? Rely on yourself, don't rely on others. Okay, yeah, and that's why I'm helping people to build up their trading skills. Okay, 6 critical skills. All right, thank you, ACK. Yeah, so you can consider to buy the course from here, and I'm going to upload the video in the YouTube, right? And that is cool because I think I have a very beautiful projector here, and the projector can write something. Okay, can move the chart as you hear. It's very cool. Right? I really love this room. So see you guys next week. Okay, see you guys next week. All right, plan your trade your plan. I'm Jack. Okay, so good luck. See you next time. Bye bye. Yeah, that's the interactive board. Correct. Okay, I'm going to end of this session. So I'm going to upload the video maybe in the later evening. So just wait for the in the YouTube channel. Okay. See you. Bye bye. Okay.